Good afternoon and welcome to Money Tips Daily. This is Charles Kelly. Well, in the US, the 16th largest bank in America has just failed. It's just had to be taken over by the regulators, and it's the largest bank collapse since 2008. But in the UK, the media is concentrated on much more important things than a bank collapse. It's football and Gary Lineker. Yes, all the media here is talking about Gary Lineker, how he's been suspended from Match of the Day, and now his fellow presenters, Alan Shearer and Ian Wright, have walked out in solidarity, like this sort of a miners' strike thing, secondary picketing and all that stuff that we had in the 70s. They've walked out, and now other presenters like Alex Scott and a few others have said they're not going to go ahead. So the BBC have had to cancel Football Focus, which is a Saturday midday show, and Match of the Day will be not presented by anybody. They're just going to show football highlights. It's all over Gary Lineker's comment, of course, about the government's handling of the migrant crisis and the people illegally coming here on boats. Now, whatever you think of that, Gary Lineker's made several tweets about things in the past about migrants. I think the BBC was a bit embarrassed, so they suspended him, said we've got to get this policy right. And so now it's created this furore, and it's become like national news. And after all, it is a football program, and it's not everyone even watches football. I know millions of people do watch it, but it's become a major thing. There's reporters camped outside of his house. Gary Lineker, incidentally, earns about 1.3 million for presenting a weekly show for a couple of hours, and that's when football is even playing. And I think it's an absurd amount of money to pay a presenter, no matter how good he is, and he is a good presenter, but it's a show that people would watch anyway because they've got the monopoly on the Saturday night highlights of football. Of course, Sky shows the game live, but BBC have still got Match of the Day. It was a very popular program. It's not like you can watch the same football on other channels, so you don't really need a star presenter. People would watch it anyway to see their favorite team playing. So that's all about that. Let's get back to more important things, which is this bank, Silicon Valley Bank. You may not have heard of it. You might think it's some sort of micro bank, but it's actually quite a large bank. It's a multi-billion-dollar bank, 16th largest in the US, but it's no small fry bank. Been going since 1983, I believe. And, it's a major thing because we saw in the last financial crisis, when banks started to collapse, it brought down things like a deck of cards, and the Federal Reserve and the governments had to step in. So this could be the start of a new crisis. Now, we've heard lots of people talking about a liquidity crisis in the world going on at the moment, with the Federal Reserve pulling back money. It's called quantitative tightening. Quantitative easing is where they print money, and quantitative tightening is where they somehow rein it in and cause the world to go into recession, which is to get down inflation, which they cause through printing money. Yeah, I don't quite get it, but that's the way things seem to work. So because the regulators stepped in, people's deposits are tied up in this bank, and it shows you what can happen in a banking crisis, that everyone tries to rush and get their money out. There was one firm that got something like $1 million out of the bank hours before it sort of closed its door. Other people have been trying to transfer money out but failed to do so. There's photos on the internet of people queuing up to get into the bank, and this is what happens in a banking crisis. You get situations like this where things just really go wrong. I'm just sharing the screen there. Credit investors see potential risk as SVB collapse. So this is the bond market responding that there could be a risk to the whole markets because of things like this, because of banks collapsing. And it's during, they're sort of a tech-based bank lending to tech firms, but it's that there are people who've got deposits in. There are companies like Roku who have got something like, I believe, $487 million tied up in this bank. So it's quite a serious issue. You've got companies that have got major deposits in banks, and that shows you, where is your money safe? Look, this is a tech company called Roku, had 487 million in cash, at failed bank, and that's just one of billions of dollars worth of deposits. Now, where a bank fails, what happens to people's money? Well, in the US, they protect people's deposits up to $250,000, and that's it. And in the UK, because this bank has got a UK arm, and the Bank of England said that people's deposits would be protected up to £85,000. Now, I've talked about this before, and I said it's not a good idea to have all your eggs in one bank basket and to spread things around. It's not a good, and you can see here people queuing up to get in the bank, Silicon Valley Bank. So this is quite a serious thing. I mean, it's not a small thing. This could escalate into bigger issues. And as I said, all we're talking about here in the UK, all over the news, is Gary Lineker. And some people might say, well, who cares? But I think when it comes to bank failures, there's been a little bit of coverage on it, but not very much. And I think this is serious. So the lesson here is to just be aware of what's going on with money, and to think about really what is money, because we've seen that this stuff, these dollars, can be just printed by the Federal Reserve, and the Bank of England have a way of printing. They don't literally sort of get printed off the press, but they create money through debt, and it is almost like, as some would say, fake money, because there's nothing back in it. So what is real money? Is it this, or is it this? Is it gold? I mean, this is a gold coin. It's a 1 ounce coin worth about 1,700 pounds, or I think $1,800, something like that. I can't remember the price in dollars, but this is an ancient store of value. Used before the Romans' time. Gold was considered to be money, and these paper notes used to be backed by gold. So you could go into the bank and say, I would like, it would say on a Bank of England note, the bearer of this note can exchange their money for gold at the Bank of England. I'm pretty sure it doesn't say that anymore. And of course, in America, they took the US off the gold standard in 1971. That was under Nixon. And they've had other gold crises in America as well. It was Roosevelt that told every citizen that they had to surrender their gold to the Federal Reserve, or to the regulators at that time, and it was illegal for citizens to hold gold for many years in the US until fairly recently. Then, of course, there's silver. Silver used to be used in coins and until a few years ago. Of course, there's a famous story of the Romans diluting their coins and putting cheaper metals into coins, which then eventually led to their collapse as an empire, because they had inflationary problems. And it's a bit like, the more you print of this, the 30 trillion that have been printed of these, since the last couple of years, the events of the last couple of years, is now causing rampant inflation. This coin here, silver coin, worth about 16-17 pounds, and it's got the King Charles head on it, so it's a new silver coin. I always like to keep a few gold and silver coins and some money in gold. I wouldn't put all my money into gold, obviously, but it's always useful to have a bit. It's a store of value, and I think it could go up. And another development we've seen in the last few weeks is this situation with the war, which, of course, the regulators blame the war on inflation. I don't think that's true, but we've seen this situation with the war, and the fact that the European countries said to Russia, we're not going to buy your natural gas, thus shooting themselves in the foot. And now we've seen record prices for natural gas, for oil, which is crippling industry across Europe and Germany. It's crippling producers of food in Holland that have these massive, almost city-like greenhouses, which need carbon dioxide. They need natural gas to power it. They can't just get this on wind farms and solar panels. They need power, and now they've stopped producing. There's massive demonstrations in Holland, tractors blocking roads and this sort of thing, because they're not happy with the government's policy on this. and also the green energy policy as well, which is stifling industry in Europe, not in China, not in Asia. And so we've got a lot of problems going on. And what Russia did when the West said, we're not going to buy anything from you, they just sold their oil and gas to countries like India and China. In fact, now they're coming off of the gold, the dollar standard, the dollar reserve standard, and trading in non-dollar denominated currencies like the Chinese currency. And this is taking away the dominance of the dollar as the world reserve currency. So what we're seeing is a new economy emerging, a new world order under the so-called BRICS countries: Brazil, Russia, India, South Africa, and other countries want to join this group of countries to trade. And I think what happened with Russia, they sold oil and gas to China. They were paid in the Chinese currency, which then much of which they converted into gold on the Shanghai exchange. So this is outside of the US control. And some are saying that the only way that the US can respond to this is through war. It's through disrupting things in between Russia and countries that want to trade with them. And now Iran wants to join BRICS as well. So we're seeing a lot of changes going on, and there's obviously a worrying sign of military build-ups and China threatening to get involved with the war, and other countries are joining in on Russia's side. So are we seeing the start of WW3? Some are saying it's already started. I dread to think what will happen next if it goes to the ultimate stage. So we're seeing a lot of things going on. I've got to try and remain positive but prepare for the worst, and think about where your money is. Think about where you invest your money. Is it better off in assets than sitting in the bank account, for instance? And assets include things like gold and silver as commodities, as metals, but it also includes shares and property. However, I also believe that the stock market is due for a big correction, particularly with things like this. A bank failure does not instill confidence in the markets. So I think we are due for a correction in stock prices, which have been on this almost continuous bull run since 2008. The demographics are not helping, because a lot of baby boomers are coming to the end of their productive life. And it'll be a long time before it'll be another few years before the millennials take over and start naturally through demographics building up the economy again. So the lessons here is really to be aware of money, to learn more about money, to become more financially aware, so that you know what's going on in the world. And you can do this by reading. You can do this by attending a webinar that I'm running next Wednesday evening, where I'll be looking at money. I'll be looking at how to manage your money, how to invest your money for the future, how to get control and build wealth for the future. It's not a get-rich-quick scheme. I'm not going to suggest people put their money into some crypto Bablo thing to double their money in a year. This is real stuff, a real thing. And I was a financial advisor for 25 years, so I know what I'm talking about. I've written 2 books on money, and I'll be giving my experience to you next Wednesday at 8 p.m. So look at that. I'm going to go through this 3 steps to success money management, the 3 steps to, first of all, getting control of your finances. Secondly, to start to manage your money better and invest for the future. And thirdly, how to consistently maintain that over the future. And that is also about your money mindset. Because if your money mindset's wrong, you'll never build wealth. You'll never be financially free. So I'll be talking about that in the webinar next Wednesday.